And welcome to the Closing Bell. I'm Sue Herrera, in for Maria Bartiromo. She's a little under the weather. Feel better, Maria. She'll be back tomorrow, I know, because it's a big jobs day tomorrow, Friday, which you could say, well, Wall Street's already focusing on that.
I'm Bill Griffith. That's right, Sue.
Thank you, Bill.
Tomorrow. In today's Closing Bell Exchange, our pros are on the job ahead of that jobs report. With us now, John Writing of RDQ Economics. We've got Mike Ryan of UBS. Tom Belesis of John Thomas Financial is with us here at the New York Stock Exchange, and our own Rick Santelli. And Rick, I'm going to start with you to give us the market perspective. What's the expectation? I mean, the number we all keep hearing is 90,000 job growth for tomorrow. Is that what the market is priced in, do you believe?
Well, I think after ADP today, the whisper number, both on the telephone with brokers and the brokers on the floor themselves, I would say 115 to 125,000 might be the whisper number, so it's elevated a bit. But it's very hard to pick, and I think the bigger story is the volatility in equities, the lack of volatility, still a one-direction market in the credit markets due to the central bankers continuing to play the only card that they have, and the disappointment in the market. And what does that portray about the world economy 1 quarter or 1 year or a couple of years down the road? So there's a little bit of a negative feeling going into tomorrow's number, but specifically a little less negative after ADP.
But you know, John Writing, ADP, there are long-term correlations with ADP and the government numbers, but a lot of time there's a little noise short-term and they don't often correlate. Do you believe that ADP is giving us a general and a very good read on what we can expect tomorrow or not?
Well, I don't know whether it's giving us a good read, though the increase was about in line with the average so far this year. But it's not the only indicator that suggests there's some upside. We had a drop in initial jobless claims. And although the non-manufacturing ISM disappointed a little bit today, the employment component actually rose. So
that's true.
If you were to throw all that into the soup, it would suggest a number probably more like 150,000 for private payrolls versus our own forecast of 100,000. Not enough to really make a big forecast change, but enough to hold out some hope of upside risk. And if we get it, it'll be the first report in 4 employment reports where we will have seen that.
Tom Belesis, I guess it's not a very PC thing to say to you that we're splitting hairs with these numbers. But you are expecting a surprise to the upside, though, tomorrow,
We are.
aren't you?
I mean, as you can see, there's so much fear already baked into this market. When you see Treasury yields trading at record lows, many investors are positioned very negatively. Today's ADP number tempered that negativity. Right. So tomorrow's report, for it to have a huge impact in the market, it has to be extreme one way or the other. With that being said, if it's positive, people are going to focus back on earnings. Now, if earnings come in, decent, I think these indexes go to new highs.
John, what about earnings? There's a lot of talk on the street that we're going to get some warnings that earnings are not as robust as perhaps the street has factored in. Do you agree with that or not?
Well, I think if you're going to get job creation, you're not going to get the earnings growth that you've been getting, because much of the earnings growth was generated from margin expansion that was fueled by productivity. And in this one, you really can't have your cake and eat it in an economy that's only growing at around a 2.5% pace. Mm-hmm. But there has been some good news on the earnings front in the economic numbers, and that's in the commodity markets, where we have had, despite the fact that commodity prices are up 10% since the middle of June, we have seen commodity prices come down. So there is going to be some raw material cost relief, and we saw that in the ISM, both the manufacturing and the non-manufacturing ISM. But earnings not going to be growing like they were growing a year ago.
Michael Ryan, we haven't forgotten about you. What are your expectations for tomorrow, and kind of put it in perspective for us of what it'll say about the state of the economy right now?
Well, it's hard really to disagree with what either Rick or John said. I think what you're going to get is a number that suggests that things are moderately better in terms of where they've been the last couple of months. But don't look for any big upside surprises. I mean, we're talking, the difference between 90 and 115 or 120. We're not talking about 250 or 275. So right. I think what you get to see is the job situation is perhaps not as dire as some have been forecasting, but don't look for a big print on this number tomorrow. I think what we need to start focusing on is, and I also think that was already touched upon, is what does this mean for earnings going going forward. Look, I think on the earnings side, I actually think the bar is set fairly low, so I think there is some room that we could outperform. But I think the real issue is going to be in the guidance we get, because remember, there's been a very, kind of modest outlook for the future, and I think that's still going to be reflected in the guidance we get from companies.
Rick Santelli, I know you're not thrilled about all this Federal Reserve intervention and what central banks do and Operation Twist and all that, but imagine if there were none of that, what the jobs numbers would be like. I mean, they're anemic at best now, even with the help from various central banks.
Okay, so, if you have a hole in your tire and I strap on an air pump and you keep driving, there's air in the tire, does that make you feel, is that tire really in good shape? I think the argument that the sugar buzz creates a jump in jobs that seems to be non-sustainable, I think that's a horrible defense of the program.
I was teeing it up for you, my friend.
You did it beautifully, by the way.
You handle it very well.
Hey, Mike Ryan, is there any chance of a downside move? Or is the market overly optimistic about these numbers? There were a couple guys down here who were saying, be careful, the numbers might be significantly less than the street is expecting.
Yeah, there's always a risk. We talked about this whisper number being in the 120, 125, even 150 range. I think if we get a print that's at or below consensus, given the fact that we're in that kind of funky period in this July 4th holiday, we don't have a lot of people in, liquid conditions are kind of stressed. I think there's some room for some downside if we do see a disappointing print tomorrow.
Quickly, Tom, you're the positive guy here. Are you stepping in here? Are you buying out of this?
The bottom line is, this is the time to buy. Valuations are attractive. There are no sellers in the market. Despite all this negativity, we're still 12,900 in the Dow. The S&P needs a little tick to go to the upside for a new high. So I think right now is the time to step in and buy stocks, despite what happens with the numbers tomorrow.
All right. Thank you all.
Spoken like a true bull.
There you go. We'll see you gentlemen later. Thank you for joining us here. We're heading toward the close. Hope you can stick around for the next few hours as we get ready for this big jobs number. Right now, the Dow, with about 50 minutes of trading left, down just 11 points. The NASDAQ still higher right now.
Yeah, it was higher earlier. It hasn't held on to it. All right, don't go away. Much more ahead on this very busy edition of the Closing Bell.